It's no surprise that interest rates are almost double than they were in 2021. And because of the high interest rates, it's stopping people from upgrading or buying their first home. Well, in today's video, I'm going to show you exactly how you can buy your first home, upgrade to a new home, or invest in real estate without a traditional mortgage. But if you're new here, my name is Marvin Alvarado, the Sneakerhead Realtor here in Salt Lake City, Utah, and I get calls and messages from people just like you every single day looking to make their move here to the state of Utah. And I love hearing from you guys. So if you're thinking about making a move here in the next 6 days, 6 months, or even a year from now, feel free to reach out to me. You can call me, text me, email me, do whatever you need to do to get a hold of me. I look forward to hearing from you, and I look forward to helping you make your move to Utah as smooth as possible. Now, you may have heard the word seller finance. It's a way to be able to buy a home without using a traditional mortgage. Most real estate agents aren't going to tell you about it, and loan officers are certainly not going to tell you about it, just because it kind of cuts them out of the process, and you don't have to get approved for a mortgage, so you don't go through them in order to make your purchase. But buying a house using seller finance has a lot of advantages. Not only are you able to negotiate the terms, length of the loan, interest rates, down payment, but it gives you a lot more flexibility as into how you can get approved for this or how you can buy a home, especially if you're self-employed, haven't been in a job for 2 years but have really good income, or just want to be able to buy a house and avoid those 7 to 7.5% interest rates that we currently have. So when you buy a home using seller finance, you essentially cut out the mortgage company. So you're not going through the mortgage company or a loan officer to buy the home. When you're using seller finance, the seller himself or herself is acting as the bank, and you're going directly through them to finance the home. This is why you have the ability to be able to negotiate interest rates, down payments, and the terms of the loan. Seller finance is a great option because a lot of sellers are offering it currently because they're just simply looking to upgrade to a new home and are looking to sell their home, so they want to be able to offer more options to buyers versus just getting a traditional mortgage. The reason for a seller offering the seller finance is because they have the ability to be able to make a little bit of money on the monthly payment depending on what their interest rate is. So for example, if a seller refinanced their home or bought their home a couple of years ago and they currently have a 3% interest rate, a lot of sellers may be willing to offer a 4% interest rate or a 5% interest rate to the buyer, but as a buyer you're able to negotiate that. So essentially you're able to potentially save yourself a 2 to 3% interest rate, if not more, depending on what the seller has currently as an interest rate. Which getting a mortgage at a 3 to 4% interest rate versus a 7 to 7.5% is a great deal. But with using seller finance, you have the ability to also negotiate the terms. So let's say, for example, you have a new job, you're self-employed, and just are not, not making the amount of income, or you're not reporting the amount of income in your taxes that would allow you to qualify for a home, or you just don't have two years of work history in your current job. This is a great opportunity for buyers because not only are they able to get into a home now, but you can negotiate the terms. You may be able to get a 30-year terms with the seller, but you can also get terms with the seller from anywhere to like 2, 3, 5, 7 years, which this will give you plenty of time to be able to establish your self-employment history or your current work history. And after that time frame that you negotiate with the seller, you can refinance that home to be able to be at whatever interest rate is it is at that time. But it's just going to be able to allow you to be able to get into a home now and avoid those 7 to 7.5% interest rates, and be able to start gaining equity and be able to get into a home with a significantly lower interest rate. Now, when you buy a home using seller finance, there are third-party companies that will, take care of the payment. So essentially, the way it works is that you make the payment to this third-party company, and they will send the funds to the mortgage company. So they'll make the payment to the mortgage company and send whatever funds are due to the seller each month directly to them. So this is a perfect way to be able to prevent any issues from happening. So be able to prevent the seller from potentially forgetting to make a payment on the house, or not making a payment on the house for whatever reason. So as a buyer, you can protect yourself by hiring a third-party company to make sure that they take care of the payment every month, to avoid any issues from happening and any missed payments from happening during the seller finance period. Another great thing about using seller finance is that you're able to, avoid a significant amount of closing cost when buying a home through the seller finance process, because you're cutting out the mortgage company and not getting, approved for a mortgage and not going through the mortgage process. You essentially, avoid all the fees that the lender would charge in order for them to be able to process your loan and be able to fund your loan. So you're avoiding all those costs. And the nice thing with seller finance as well is that you can typically close significantly quicker than you would with a traditional mortgage. So usually a traditional mortgage is going to be anywhere from 25 to 30 days, but depending on the seller's situation and your personal situation, you may be able to close on your house using seller finance with as little as 1 week to 2 weeks. Like I said, depending on what you do, negotiate with the seller and what the seller situation and your situation is. But with seller finance, you have the ability to be able to close on your home significantly faster than you would on a traditional mortgage. Now, seller finance is a great way to be able to buy a home if you're not able, like I said, to qualify for traditional mortgage, or you're self-employed, whatever the case may be. If you have questions about seller finance and want to explore seller finance to see if it's going to work out best for you, or have any questions about the seller finance process and about how something works, feel free to drop those questions in the comments. But I hope this information has been helpful. Don't forget to hit that like button, hit that subscribe button, and I'll see you on the next one.